The answer may surprise you: debt or investing first. In 2019, David faced a choice that changed his financial future forever. He owed $24,600 in debt but had $18,000 sitting in a savings account already. Everyone around him offered different advice, making the decision even harder. One friend insisted investing first was always the smartest move for wealth growth. Another warned that expensive debt silently destroys wealth every single month. David stopped listening to opinions and started looking only at the numbers. His largest credit card charged an unbelievable 22% yearly interest. His investments had earned only about 8% during recent market years. One simple comparison completely changed the way David viewed money forever after. Before making any move, he calculated what debt was truly costing each month. His credit card balance grew every month, even after making regular payments always. Interest charges quietly consumed money before David could build real wealth ahead. He discovered nearly $400 vanished in interest every single month. That money could have stayed in his pocket instead of paying the bank every month. David realized high-interest debt guaranteed losses no investment could easily overcome. Even strong market returns rarely beat credit cards charging over 20% yearly. The numbers exposed a financial mistake thousands of families make every single year. He decided to compare every dollar earned against every dollar lost through interest. That simple exercise revealed where his money worked hardest for his future security. The answer surprised David and completely changed his financial plan from that day. David paused every investment and focused on eliminating his costly debt first. Every extra dollar now attacked the balance instead of chasing market returns first. 3 months later, his monthly interest bill had already dropped by nearly half. For the first time, more of David's paycheck stayed in his own pocket each month. The progress felt slow at first, but every payment created lasting financial freedom. 1 year later, the highest interest credit card balance finally reached $0. Without expensive interest, David suddenly had hundreds of dollars free every month. Now he restarted investing with far less stress and much greater financial confidence. Every investment dollar could finally grow without competing against costly debt anymore. David learned that timing mattered less than removing the biggest financial obstacle first. David shared his results, but one financial advisor offered an important exception. Not every debt should be paid before investing, the advisor carefully explained then. Some loans carry interest rates so low that investing may create greater long-term gains. David's mortgage charged only 3%, far below expected investment returns later. His credit cards charged over 20%, making them the real financial danger. The lesson became simple. Interest rate decides which choice deserves priority first. High-interest debt steals wealth quickly, while low-interest debt gives you more options. David now understood why one answer never fits every person's financial situation. The smartest decision depends on numbers, not popular advice from friends or headlines. David finally built a strategy based on facts instead of fear or excitement alone. Around the same time, Sarah faced a very different financial situation than David. She owed $30,000, but her loan charged only 3% interest. Her employer also matched retirement savings, offering free money every single year. Ignoring that match meant turning down guaranteed returns with almost no investment risk. Sarah contributed enough to receive every matching dollar before paying extra on debt. Her investments kept growing while the low-interest loan remained affordable each month. Because her loan cost so little, investing first created greater long-term financial value. Years later, Sarah's retirement account had grown far beyond her remaining loan balance. Her strategy succeeded because the numbers supported investing before faster debt payments. David and Sarah chose different paths, yet both followed the same financial principle. David called Sarah to compare their results after several years had quietly passed. Both had increased their wealth, despite choosing completely different financial paths. Their success came from understanding interest rates instead of following popular opinions. They discovered money grows faster when every decision is backed by simple math first. High-interest debt acted like a hole, leaking money before wealth could truly grow. Low-interest loans behaved differently, allowing investments more time to compound steadily. The biggest mistake was assuming every loan should always receive the same treatment. Every debt carries its own cost, and every investment carries its own possible return. Financial freedom begins by comparing those two numbers before making any major decision. That simple habit helped both David and Sarah reach stronger financial futures together. David realized anyone could use the same method before making a money decision today. First, list every debt with its balance and yearly interest rate beside each one. Next, estimate what your investments may reasonably earn over many years on average. If debt costs far more than investments earn, paying debt first usually makes sense. If debt costs much less, investing while making payments may build greater long-term wealth. David wished someone had explained this simple rule when he was much younger before. One lesson could have saved him thousands of dollars in unnecessary interest payments. Instead of chasing quick profits, he learned to remove expensive financial obstacles first. That single change gave every future investment a much stronger chance to succeed later. The answer was never debt or investing first, but choosing the better mathematical move. 5 years later, David looked back at the decision that changed his financial life. His high-interest debt was completely gone, leaving him with greater monthly freedom. Without heavy interest payments, he invested more money than ever before each month. His investment account finally grew faster because nothing was pulling it backward anymore. Sarah also reviewed her finances and smiled at the progress she had achieved steadily. Her retirement savings had doubled while her low-interest loan kept shrinking each year. Both stories proved success depends on choosing the right strategy for your own numbers. Neither copied someone else because every financial situation tells a different story always. Smart decisions begin with facts instead of fear, trends, or internet opinions alone. David's biggest victory was learning how to let simple math guide every money decision. David noticed many people repeated the same costly financial mistakes every single year. The first mistake was investing while ignoring high-interest credit card balances growing. Every dollar earned was quickly erased by expensive interest charged month after month. Another mistake was avoiding investing completely because of small low-interest loans only. That choice often meant losing valuable years of compound growth and employer matching. David learned emotions often make financial decisions more expensive than necessary later. Fear pushed people toward one choice, while facts usually pointed somewhere completely else. Successful investors focused on numbers instead of headlines or popular online opinions today. Simple calculations helped them avoid mistakes that could cost thousands over many years. The best financial plan always starts with understanding exactly where your money is going. Looking back, David realized one decision had shaped every financial step afterward. He never searched for perfect timing, only the smartest use of every dollar earned. Every paycheck now followed a clear plan instead of random financial decisions daily. Small monthly choices quietly became the foundation of lasting financial independence later. His wealth grew because he solved expensive problems before chasing bigger investment returns. Sarah proved another truth by investing early while managing affordable low-interest debt. Different paths created success because both decisions matched their financial situations well. The numbers mattered more than opinions, trends, or emotional money decisions every time. That simple lesson continues helping families build stronger finances year after year today. The surprising answer was simple. Always let math decide before emotions ever do. David's journey proved that financial success begins with one informed decision at a time. He stopped asking what others would do and trusted the numbers in front of him. Your first step is knowing every debt balance and the interest charged on each account. Then compare those costs with realistic investment returns over the coming years ahead. That comparison often reveals the smartest financial move more clearly than any opinion. There is no universal answer because every person's financial situation is different today. The best strategy is the one supported by your own numbers and long-term financial goals. David never forgot the lesson that simple math protects money better than emotions can. That single habit transformed his finances and gave him confidence for every future decision. Now ask yourself, what is your highest interest rate costing you every single month? David's story was never about choosing debt or investing without careful thought first. It was about understanding where every dollar could create the greatest financial value. High-interest debt demanded immediate attention because every day it became more expensive. Low-interest loans offered flexibility, allowing long-term investments to keep growing steadily. Both choices worked because each matched the person's real financial situation and goals. The smartest financial advice is always based on facts instead of popular internet myths. Every interest rate tells a story, and every financial decision changes your future ahead. Take a few minutes today to review your debts, savings, and investment opportunities now. Small decisions made today can save thousands of dollars during the years ahead easily. Financial freedom rarely comes from luck but from consistent smart decisions over time. David never became wealthy overnight, but every smart choice moved him closer each year. His greatest investment was learning how money truly works before risking another dollar. Knowledge helped him avoid mistakes that once seemed completely normal to everyone else. That lesson continues helping millions build stronger financial futures around the world today. Remember, compare your debt costs before expecting investments to create higher returns. One careful calculation today could completely change your financial future tomorrow ahead. The best financial decisions are simple, logical, and supported by real numbers always. Your journey may be different, but the principle remains exactly the same every time. Use today's lesson to build a stronger future for yourself and your family together. If this story helped you, share it with someone making the same money decision today. Subscribe for more real financial stories that make complex money choices easier to understand. Thanks for watching, and remember, let facts and numbers guide every financial choice.